Ever wondered how some investments seem to sprint ahead while others barely trot? Today, we're diving into the performance of FSPGX and seeing how it measures up against giants like SCHG and the S&P 500 ETF Trust. In the world of investment funds, understanding and comparing various performance metrics is crucial. These funds, FSPGX, SCHG, and the S&P 500 ETF Trust, each offer unique advantages and challenges. First up on our analysis dashboard is the CAGR, the annualized return, a pivotal metric for assessing growth over time. When we dive into the world of investments, few metrics are as telling as the compound annual growth rate, or CAGR. For FSPGX, this figure stands at an impressive 18.51%. This is quite competitive when placed alongside SCHG's 18.73%, and significantly higher than the S&P 500 ETF Trust's 14.16%. But let's not stop there. What truly enhances the appeal of FSPGX is its expense ratio. At a mere 0.035%, it's significantly lower than the SPDR's 0.09%. This lower expense ratio means less money is siphoned off in fees, and more of your investment is working for you, potentially boosting your returns over time. With a close race in CAGR and a winning edge in expense ratios, FSPGX presents a compelling case. But there's more to the story. Investment isn't just about growth. It's also about how smooth the ride is. Let's talk volatility. When analyzing investment options, understanding risk and how it can affect your portfolio is crucial. Two key metrics to consider are standard deviation and maximum drawdown. Standard deviation measures the amount of variation or dispersion from the average return of an investment. A lower standard deviation means less volatility and generally a smoother investment journey. For instance, FSPGX has a standard deviation of 18.63%, slightly lower than SCHG's 19.03%. This suggests that FSPGX offers a somewhat steadier performance over time. Now, let's delve into maximum drawdown. This metric reflects the largest single drop from peak to trough before a new peak is achieved, which is vital for understanding the worst-case scenario in investment terms. FSPGX recorded a maximum drawdown of negative 30.68%, again showing a resilience that marginally outperforms SCHG's negative 31.8%. FSPGX not only grows steadily, but also steadies the bumps better than SCHG. How about the best and worst of times? Let's find out. Every fund has its banner years and its challenges. How do our contenders fare in their best and worst times? Let's dive into the roller coaster of market performances. Starting with FSPGX, it soared to a remarkable 42.77% in its best year, showcasing significant growth potential. This impressive leap outpaced the S&P 500 ETF Trust, which peaked at 31.22%. However, it slightly trailed behind SCHG, which reached a high of 50.11%. On the flip side, during its toughest year, FSPGX demonstrated considerable resilience, limiting losses to 29.17%. This was a narrower drop compared to SCHG, which saw a decline of 31.80%. Both funds, however, experienced less of a downturn than the broader market, represented by the S&P 500 ETF Trust, which had its worst year at negative 18.17%. FSPGX shows robust performance in good times and resilience in challenging times. But let's see how it truly stands out in terms of overall risk-adjusted returns. When evaluating investments, the Sharpe and Sortino ratios give us the clearest picture of risk-adjusted returns. Remember to subscribe and comment on what fund you would like me to evaluate next while we talk about the next key risk factors. Let's dive into these metrics. The Sharpe ratio measures how much excess return you receive for the extra volatility you endure holding a riskier asset. On the other hand, the Sortino ratio focuses only on the downside volatility, which is especially useful for those who are risk-averse. Now, how does FSPGX compare in this arena? Holding the highest Sharpe ratio of 0.91, FSPGX demonstrates that it provides superior returns per unit of risk compared to its peers. Furthermore, its Sortino ratio of 1.46 is also the highest in the group, which underscores its efficiency in managing negative fluctuations in value. Comparatively, SCHG has a Sharpe ratio of 0.90 and a Sortino ratio of 1.45, while the SPDR S&P 500 ETF Trust trails with a Sharpe ratio of 0.77 and a Sortino ratio of 1.18. With superior risk-adjusted performance, FSPGX not only grows your investment, but does so with a keen eye on managing risk. As we wrap up our deep dive, let's summarize why FSPGX might just be the dark horse in your investment stable. Delving into the heart of its performance, FSPGX boasts a competitive compounded annual growth rate of 18.51%. Notably, this comes with an attractively low expense ratio of 0.035%, ensuring more of your investment goes towards growth rather than fees. When it comes to volatility, FSPGX shows a commendable standard deviation of 18.63%. This indicates a slightly lower level of risk compared to some peers. Furthermore, its maximum drawdown stands at negative 30.68%, which, while significant, is still within a manageable range for many investors. The fund's performance in its best and worst years also stands out. A best year surge of 42.77% and a worst year drop of negative 29.17% highlight its resilience and potential for recovery. Whether you're galloping towards retirement or trotting towards your first investment, FSPGX offers a robust, well-rounded choice. Consider how it fits into your portfolio and investment goals.